By Danilo Massoni Milan. Reuters. Fat order books covering several years of sales have made European aerospace and defense firms a winning bid as a slowing economy and political instability have clouded prospects for the region's equity market. The sector's stock prices have been hitting record highs, even as investors become more wary of European economic growth falling from its peak and as fears of a global trade war put other big multinational industrial stocks in the crosshairs. For many investment funds, the aerospace and defense sector is more insulated from the economic cycle as it wore through a huge backlog of orders and fractious geopolitics spur demand for military equipment. Order books are currently very large, and this gives visibility and makes the group somewhat more resilient from the general economic cycle, said Sandrine Perret, strategist at Credit Suisse International Wealth Management in Zurich. It gives the aerospace sector a comparative advantage relative to others that are more sensitive to short-term business fluctuations. Perret added, President Donald Trump's trade protectionism raises uncertainty about future U.S. On top of that, while U.S. and that could be more than offset for European firms from countries seeking to reorientate trade away from Washington. The European Aerospace and Defense Index (SXPARO) is up 15% so far this year, just below the all-time peak touched last week when the European Central Bank cut its growth forecasts following 4 months of largely weaker than expected economic data that has put the sector ahead of others not only in Europe but also in the United States. Cheshire Index, for example, is lagging with a 13% year-to-date gain. The record-breaking Nasdaq, a number of stocks in the sector, from plane maker Airbus AIRPA and German engine firm MTU Aero Engines MTX GmbH to French defense electronics group Thales TCFPDA, have been surging from one record to another. Investors are very happy and companies are delivering, said Celine Fernaro, head of European Industrials Equity Research at UBS in London. The sector is long cycle, less exposed to the volatility of the quarter's robust commercial order book of more than 700 jetliners currently represents a record 8 years of anticipated production, and defense companies have once again begun selling more than they deliver. In a sign growth is returning to the sector amid tensions between the West and Russia. Graphic, a winning bid. https Reuters/2JQPTM1. What could stop the cycle? Europe-based companies are also getting a lift from the stronger dollar. Economies' outperformance versus Europe. ND prospects for more interest rate hikes by the U.S., which is being underpinned by the U.S. Federal Reserve. Credit Suisse's Perret said European manufacturers sell aircraft and retail parts in dollars while their production costs are largely in euros. This helps explain why the European NCE stocks are on track to outperform their U.S. peers this year. Although she said the currency tailwind may be short-lived, we foresee the euro rebounding against the dollar over the next 3 months, said Perret. Nevertheless, Europe's Aero Defense Index is on track to beat its the USS Aero for the first time since 2015. Equivalent index, which tracks companies such as Airbus rival Boeing BAN and security firm Lockheed Martin LMTN, is up 3% so far in 2018, 1/5 of the European rise. Overall, analysts and investors remain upbeat about prospects for the industry, and broker sentiment over stocks such as Rolls-Royce RRL and Cobham COBL, which have lagged the sector, has improved. Several analysts lifted their share price targets for Rolls-Royce on Monday after the UK engineer, which has been in turnaround mode since 2015, announced new midterm goals. Cobham shares shot up on the same day after Morgan Stanley upgraded the stock, citing the company's turnaround and the start of multi-year uptick less in core defense and aerospace markets. According to research firm Forecast International, European defense spending is seen rising by more than 3% a year to $277 billion in 2022, as NATO countries in Europe are under pressure from Washington to increase spending. Trade body IATA MEANW While sees air passenger numbers doubling to 7.8 billion in 2036, we're very upbeat because more people fly and in more countries, UBS's Fernaro sums up the mood. Nothing is really new in this industry, but it's hard to say what could stop the cycle, she said. Past cycles were brought to an end by unpredictable events, the 9/11 attacks and the SARS outbreak in 2008, she added. Graphic, a record-breaking year. https Reuters/2K3 report. By Danilo Massoni. Additional reporting by Tim Heffer in Paris. Editing by Mark Potter.